Hi, today we're going to have a look at the 2017 Leaving Cert Higher Level Accounting Tabular Statement question. I suppose the first thing in this question is the layout. You will need a column for each month in the question here and two columns for December. You'll need a column for the opening balances, a column for the closing balances, and a column for the written work. To start off the question, you have to print the opening balances from the balance sheet. So in the question, land and buildings are 630,000. The depreciation of land and buildings is 25,000, and your depreciation will go in as a minus. Vehicles are 50,000. Depreciation of vehicles 27,000. Equipment is 15,000. Depreciation of equipment is minus 3,000. Stock is 73,000. Debtors are 86,400, but that's less a provision of 4%. So we want to print the full amount of the debtors. So to do that, if 86,400 is 96%, sorry, if I divide by 96, multiply by 100, I get a full debtors amount of 90,000. If the debtor's less provision is 86,400, then the provision must be the difference between 90,000 and 86,400, which is 3,600. And the bad debt provision will go in as a minus. Now, next thing we have to do are our liabilities. Fix this. The liabilities, the first liability we have is creditors. So creditors are 54,000. Bank overdraft is 32,000. VAT is 8,400. Expenses due are 6,000. Share capital is 560,000. Share premium is 30,000. And the profit and loss balance is 109,000. And again, when you put those opening balances in, they should balance. So we have 799,400 here and 799,400 here. Okay, to start doing the questions then. In January it says they revalued land and buildings to 800,000 and the land element was 110,000. Well, the land element of 110,000, you're only concerned with that in December when you go to work out the depreciation of the buildings. So for the moment, we're just going to do the revaluation. So land and buildings were valued to 800,000. So currently they're 630,000. So to get to 800,000, I have to put 170,000 in land and buildings. When you revalue land and buildings, you have to take out the depreciation. The depreciation of land and buildings at the moment is 25,000, and that's a minus. So to take it out, we're going to put in plus 25,000. And then down below in liabilities, we're going to open up what's called a revaluation reserve. And we're going to put in the total amount from above here, which is 195,000. And each month these should balance as we go along. In February, Delaney bought an adjoining business which included all of the following. So here what we're going to have to do is put in all these figures, and the difference would be goodwill, because when you buy a company, the company should be worth what the assets minus liabilities are. If they paid an extra amount, that difference will always be goodwill. So the first thing I'm going to do is put in the figures from the question. So the buildings were 180,000. Equipment is 50,000. Debtors 12,000. Creditors 20,000. The purchase price was discharged by granting the seller 200,000 shares. So my share capital will go up by 200,000. At a premium of 20 cents per share. Well, they're €1 shares, so if the premium is 20 cents per share, the premium, sorry, that should be 200,000 share capital, and the premium will be 200,000 by 20%, which is 40,000. Okay, as we can see here, the totals don't balance. There's 260,000 down below here and 242,000 up here. So the difference here will always be the goodwill, which in this question will be 18,000. In March, it says management decided that the provision for bad debt should be increased to 6% of debtors at the end of March. Okay, so we're going to do a little working for this. At the end of March, debtors were, there were 90,000 plus 12,000, which is 102,000. So 102,000 by 6% is 6120. What were they in the question? In the question, the bad debt provision here we can see is 3,600. So the provision has to increase by the difference, which is 2520. Okay, so to do that, the bad debt provision is a minus. So to increase it, it's going to be a minus, again, 2520. And if your bad debt provision increases, it means your profit is going to go down because it's an expense. So my profit goes down, P&L will go down by 2520. Any P&L items will go here in this line, profit and loss. In April, the purchased goods on credit for 14,760, and this included VAT at 23%. Okay, so again, we're going to do a little working for this. So we're going to have before VAT, VAT, and after VAT. So the goods were purchased for 14,760, which includes VAT. So that 14,760 includes VAT of 23%. So that's 123%. So to get 100%, if I get the 14,760 divided by 123%, multiplied by 100%, before VAT there must have been 12,000, which means the VAT will be 2,760. Okay, well, the 100%, the cost price is what's going to be the stock figure. So if we bought goods, that would mean that my stock is going to go up by 12,000. So here, stock is going to go up by 12,000. The next thing is the VAT. You can reclaim VAT on purchases. Okay, so that means it's going to reduce your VAT liability. So your VAT is going to go down by 2,760. And these are goods we purchased, so we're going to owe the creditor the full amount, which is 14,760. So again, we can see here that this month, April, is balanced. In June, we received a bank statement showing a credit transfer of 7,200 to cover 8 months rent in advance from June the 1st, and direct debit of 4,800 to cover security costs for the year ending 30/4, 2016. We'll do the rent receivable bit first because it's the easiest. In this question, usually when it comes up, we're going to have rent receivable prepaid. Okay, this is rent, I suppose, effectively that somebody has overpaid us and to be owed them back, so that's why that is a liability. And we're just going to bring the full amounts here in June, and we'll tidy it up, the due and prepaid parts of it then in December. So we received 7,200, so that's going to go in to rent receivable prepaid. Now, the expense one can be tricky sometimes. The date here is important. In some questions you'll have an expense due, in some questions you'll have an expense prepaid. So this security cost was for the paid up to the 30th of the 4th, 2016. Now we're doing this tabular statements at the 31st of the 12th, 2016. So we've only paid 4 months of 2016, so it's going to be an expense due. Okay, so the 4,800 will go into expenses due, and it's going to go in is a minus here, expenses due 4,800. And then the last figure is going to be our bank, because we're after getting in 7,200 after paying out 4,800. So the difference will go in bank. So 7,200 minus 4,800. And again, we're after receiving more than we're after paying out. So that's going to reduce my bank overdraft. So you just have to be careful when you're putting figures into the bank that this is a bank overdraft. So if you get money in, it's going to reduce your overdraft. If you pay out money, it's going to increase your overdraft. And again, that balances here, 0 and 0. July, we paid a check, paid by check a creditor account balance of 1800 and received a discount of €100. Okay, so this is a straightforward enough one. And we paid out 1800, we paid out to a creditor €1,700. Okay, because we owed him €1,800, we got a discount of 100, so we paid out €1,700. So my bank overdraft is going to go up by €1,700 because I'm after paying out €1,700. I don't owe that creditor the €1,800 anymore, so creditors are going to go down by 1,800, and I have received a profit of 100 because I only paid out 1,700 and I owed 1,800, so I made a profit of that, or received a discount of €100. August. August is a tricky enough one. There's a couple of things going on here. So in August, a payment of 900 was received from J. Barry, a debtor whose debt had been previously written off. This represents 60% of the original debt, and Barry is undertaken to pay the remainder of the debt. So because he's going to pay us back, we're going to sell him goods now. So on the same day, goods to the value of 369 were sold on credit to Barry, and this includes VAT at 23% and a markup on cost of 20%. So again, we're going to need to do a working for this question. So if we go down here, so the first thing that's going on here, this is a bad debt recovered. So what did we receive? We received €900, which was 60%. So the full amount he would have owed us would have been 900 divided by 60 multiplied by 100, which is 1,500. So we're still owed the difference of 600. Now, because he's going to pay us back, we sold him goods. So the goods, there was a markup on those goods, and then there was VAT. So the 369 is the very end total of the whole lot. So that's 369. That's the selling price after VAT. So to get the selling price before VAT, if I get my 369 divided by 123 multiplied by 100, they were €300 before VAT, which means the VAT must have been €69. Now, so that is the selling price, which includes the profit of 20%. So to get the cost price, that €300 is the 120%. So divide that by 120, multiply by 100. The price before the profit was added on. Sorry, the cost before the profit was added on is €150. So the profit must have been €50. Okay, so we have to put in these figures into August now. So the first thing we can do is put in the bank figures. I received €900 here anyway, which means my bank overdraft is going to go down by €900. So in August, minus €900. I'm still owed €600 here from the rest of the bad debt, and I'm also owed 369 here from selling the goods. So my debtors are going to go up by 600 plus 369. So my debtors are going to be 669. Now, I had previously written off this debt. I'm going to get it all back now. So I'm going to be up €1,500 from getting this debt back. I'm also going to be up to €50 from selling the goods. So in total, my profit's going to go up by 1550. So August profit and loss balance 1550. Then I have to do my stock. So because I'm after selling goods and the cost price of those goods were €250, my stock is going to go down by €250. And the last thing I have to do, I think, is the VAT. So my VAT is going to be, if I go down and look at my VAT, the VAT is €69. So it's VAT on sales, which is going to increase my VAT liability. So that is going to be €69. Now, sorry, this here should have been 600 plus 369, not 300. So I'm just going to change that to 600. Now we can see down here, why is it 600? It is 600 here because the amount out is 600, not 300. Okay, so that is August complete. The next thing we have to have a look at is September. So in September, we received 50,000 from the issue of the remaining shares. Okay, so here we just have to be careful, and this comes up every year pretty much. So at the moment, in the question, our authorized share capital, we can see from the balance sheet is 800,000. How many shares have we issued so far? So if I look at my share capital, it's 560 plus 200 is 760. So we've issued 760 shares. The maximum amount we're allowed to issue is 800,000, so we can only issue 40,000 more shares. So my share capital in September can only go up by 40,000, which means that the rest of it must be share premium. The other 10,000 I received must be share premium, because I received 50,000 in total. If we sold shares for 50,000, that means my bank overdraft is going to go down by 50,000, and again, that's September balance. October. Okay, so October, goods previously sold for 738 by Delaney were returned. Okay, so these are sales returns. The figure includes VAT at 23% and a markup on cost of 20%. Delaney issued a credit note for 700 due to a delay in returning these goods. So we're not going to give them back the full amount of the goods. So again, I think we're going to need a bit of a working for October. And again, the 738 is the final amount here. So the final amount is 738,000. So that's after VAT. So before VAT, it'll be 738 divided by 123 multiplied by 100, which is 600, which means the VAT would have been 138,000. Now again, that's after the profit of 20%. So this 600 is 120% of the cost price. So to get the cost price, I'm going to get the 600 divided by 120 multiplied by 100. So the cost price was 500, which means the original profit would have been €100. So the first thing anyway, that these are goods that were returned to us, so my stock is going to have to go up by €500 because we have this stock back again because they were returns. So stock is going to go up by €500. Now, the next thing we're going to have to do is the VAT. Okay, the VAT liability is going to go down because originally the VAT liability would have went up when I sold the goods, but now the goods are returned, my VAT's going to go down by €138. So in October, VAT is going to go down by €138. Debtors are going to go down by €700. Okay, because we issued a credit note for €700, not for the full amount of 738. So my debtors are going to go down by €700 because they don't owe us that €700 anymore because they've returned the goods. And my profit, now my profit should have went down by the original profit was €50. Sorry, the original profit was €100. Okay, so my profit should go down by €100 when they return these goods. But instead of giving them back the full amount of 738, we only gave them back 700, so we're up 38 from that. So really my profit's only going to go down by 100 minus, so it should have gone down by 100, but we held on to 38, so my profit is just going to go down by the difference, which is 62, and that is October balance. November, a creditor was owed 4,000 by Delaney, by us, so we owed somebody 4,000. Accepted equipment, the book value of which is worth 3,200, so they accepted equipment worth 3,200, and that's in full settlement of the debt. And that equipment originally cost us €5,400. Okay, so the first thing anyway, I suppose we don't have that equipment anymore, so that 5,400 is going to have to go out of cost of equipment. So that is going to be minus 5,400. When you get rid of equipment, you have to take out the depreciation. Okay, so if the equipment costs 5,400 and it's the book value is now worth 3,200, it must have been depreciated by 2,200. So that 2,200 has to come out. Now depreciation is a minus, so to take it out, it's going to be a plus 2,200. When I gave them the equipment, I suppose I made a profit on it because I owed the creditor of 4,000 and they took equipment which is only worth 3,200, so I'm up €800 from that. So my profit and loss is going to go up €800. And I don't owe that creditor the £4,000 anymore because they took the equipment. So creditors are going to go down by 4,000, and that is November done. Now for December, sorry, I should have said originally, for December you'll need two columns. Okay, one because there is depreciation here in December, and the second thing is we're going to have to tidy up the bank month, the due and prepaid parts of June. So we'll do the depreciation first. In the question it says depreciation on buildings was 2% of book value. Depreciation charge is to be calculated from the date of valuation and date of purchase. Total depreciation on vehicles for the year is 8,000. Where we do the vehicles first, and it's easy, the vehicles depreciation is 8,000. Depreciation is a minus, so to increase it by 8,000, I just put in minus 8,000. The depreciation on buildings we're going to do a working on. So for the depreciation on buildings, if we go back, we can see here from the top that the buildings were revalued at the 1st of January. So they were revalued to 800,000. Okay, so buildings were 800,000. Now the land element of that buildings is 110,000, it says, and you don't depreciate land. So we're just going to have 800,000 minus the land element of 110,000, and we're going to get 2% of that, which is 13,800. Then on the 1st of February, we can see from above again, on the 1st of February, we got more buildings worth 180,000. So to get the depreciation of those, it's going to be 180,000 by 2%. So again, it's 180,000 by 2%, and then we only had those for 11 months because we got them on the 1st of February, so it's going to be by 11 over 12, which is 3,300. Okay, so if I total those, my depreciation on buildings should be 17,100. So again, up here, I'm going to put in the 17,100 on the buildings depreciation, and again, it's going to be a minus 17,100. Now, depreciation is an expense, so it's going to reduce my profit. So down below, I can put in my profit is going to go down by 25,100, which is the two depreciations added together. 25,100, and again, that's balanced. So the last thing we have to do now in December is we have to go back to June and tidy up the due and prepaid parts of that month. So again, we're going to need a couple of little workings for this. So the first thing is the rent receivable prepaid. Well, the rent receivable prepaid, the full amount we got was 7,200. That was 8 months, and it was in advance from the 1st of June. So how many of those months were for this year, from June to December, which would be 7 months. Okay, so if I get my 7,200 divided by 8, multiplied by 7, so 7,200 divided by 8, and then multiplied by 7 is 6,300. Okay, so this year's amount of that was 6,300. So if I go up to my rent receivable here, the 7,200, and I take out this year's bit of 6,300, it would leave me with the prepaid amount, which is the 1 month, the €900. Again, with the security costs, so the security costs were 4,800, and they were up as far as the 30th of the 4th, 2016. So again, 4 of those months were for this year. So if I get my 4,800, divide by 12, because this was paid for a year, and if I multiply that by 4, because 4 of those months were for this year, €1,600. So that €1,600 is going to go up here. Expenses due in December, and originally it went in as a minus, so this year's will go in as a plus €1,600. And then the difference between the two of those will go into my profit and loss, because I'm after saying this year I got 6,300 for rent. I'm after paying out expenses of €1,600, so the difference will go into my profit and loss balance, which would be 6,300 minus €1,600, 4,700, and that's because I received more in rent than I paid out in the expense. And then that is the question fully done and balanced out. You have to total them across, total everything down, which I've just done in Excel there, and each month should balance. So I hope that was a help for the Leaving Cert Higher Level 2017 tabular statement, and I'll try and post some more videos soon. Thank you.